Hello everyone, in this video I will show you how I utilize the Gon Trading Bands, the DivaRSI and the Gon Conviction indicators in my trading. Let's dig right in. So you can add the indicators in the indicator menu. They will be showing up in the invite only scripts subsection for you. I already have them in my favorites, so I can add them right from here. Let's start with the Gon Trading Bands. I want to focus on the indicator only, so I will hide the price action candles for a minute and also pull up the description here. So the Gon Trading Bands consist of three main sections. The lower section consisting of the low band 1 and 2, the mid section, mid band 1 to 3, and the higher section of high band 1 to 3. Very simple and straightforward. So then you have a relative strength line here, which is the 8 EMA. And at the bottom you have the relative strength bar, which shows if the candle close was above the relative strength line, which is green, or beneath the relative strength line, which will be shown as a red bar. You can turn each of these on and off as you wish. I will show that in the settings in a minute. Let's put the price candles back up and disable this. So right click on the indicator, settings. Alternatively, you can just double click on the indicator and it will also pull up the settings window for you. So as you can see in the inputs subsection, the multi-time frame, the time frame of the Gon Trading Bands is fixed to the 1 day time frame. When I coded this indicator, I had high time frame swing trading in mind, especially for crypto. So the 1 day time frame calculation gives me the highest accuracy for crypto assets. You may have more accuracy or better results with different time frames on certain crypto assets or different asset classes. But as a rule of thumb, the 1 day time frame will give you the highest accuracy entries and targets for crypto assets. And the time frame being fixed simply means that even if you jump down to the 4-hour time frame on your chart, the Gon Trading Bands will still show you levels based on the 1 day calculation. So you can always adjust and experiment with that as you like. In terms of style, as I mentioned, you can change all the colors of each individual band or the type of line you want. Then you can toggle them off or on if you only want to focus on some for reference. The relative strength bar, yeah, I mean, it's up to you if you leave it on and off. Sometimes when I'm zoomed out and I want to really see, oh, did this candle close above or beneath, it's easier for me to just look at the relative strength bar rather than to zoom in and try to figure out, because sometimes these very accurate differences make a difference. But it's up to you, however you like your charts. I usually disable the values in the status line, and the price scale labels I have on by default, because I like just to see where my targets approximately should be, and or what price I'm waiting for to be broken through, etc. But alternatively, if you want to have a clean price scale, let me just disable this once. Here in the third menu button from the top, which is either the object tree or can also be the data window, depending on which one you have activated. So in the data window, you can also get all the values of each individual band, including the relative strength line. The relative strength bar is always going to be 1, so don't worry about that one. But here for targets, this is great. And yeah, experiment with it a little bit. I will keep on the price scale labels for now. So let me start first with if you only want to use the Gon Trading Bands, nothing else, because the DivaRSI and the Gon Conviction are complementary, not necessary, but they can give you better timed entries potentially. But it is possible to only trade using the Gon Trading Bands. What do I usually look for? Let's start with the current price action, and I will go through several examples, maybe through my whole watch list for some examples. But let me first introduce the DivaRSI and the Gon Conviction for that. But for now, let's just focus on what I look for on the Gon Trading Bands. So the very first thing is that any band, if approached from beneath, is potential resistance, and if approached from above, is potential support. So the first thing I look, where is price moving? Is it just pushing through a certain band? Is it retesting a certain band? Or is it just hovering in the middle? And the second thing I look for is, what's the price in relation to the relative strength line? Is it above, closing above the relative strength line, or beneath the relative strength line? So just based on these two points, I can already make entry and exit decisions. So one very usual example you will see in the current market trend is where price starts getting squeezed between the relative strength line and a certain band. And this is usually a very good sign for me. So if I see some consolidation, here, and then we see the break above consolidation. At the same time, of course, the price candles close above the relative strength line, and it is not unusual to see resistance at the bands, but price keeps respecting the relative strength line and gets squeezed between the relative strength line and the resistance band in this case. So when I see price then push through the band, and also it has been riding the relative strength line, that's when I get interested in a long. Either right at the candle close, or ideally I want the 8 EMA, the relative strength line, to also move together with the price through any resistance band. So resistance bands, I'm calling bands approached from beneath, yeah? So any of these can be a resistant band, or a resistance band, or a support band, depending on how price approaches the band. So when I see price and the relative strength line moving both through this resistance band, then I will start looking for entries. The early entry would be the first candle close, but if the candle close is like way above the resistance band, or very far away from the relative strength line, I will not go all in. So maybe half a position size at the candle close here. And then when I get further confirmation that the relative strength line is also moving through the resistance band, and it will get retested usually. It will get retested during that time. So I will just time my entry at the retest of the resistance band, especially when the resistance band is in line with the relative strength line. So entry here. Then usually, I mean, it's always case by case. You will get a feeling for it as you gather experience, but usually I just look for the last very prominent like wick under the relative strength line. And it's of course also okay if you like want to keep your stop loss a little bit further away under the consolidation. But generally speaking, once we reach this kind of price action where the daily candle closes above a resistance band, and then it gets a retest, and then you get the 8 EMA also pushing through the resistance band, usually you will not want to see a super long wick to the downside, or like candle closes under the resistance band from that point anymore. So it would even be okay to use this wick as a stop loss level. but just visually speaking, and just honestly saying, I would probably use this wick just because it sticks out to me, and I do not want price to drop 9% beneath the band anymore from there. And then I will just target the next first band, maybe 50%, 25%, 30%, depending on how long you want to be in the position, if it's an investment for you, like a longer term investment, or if it's just a quick trade. Usually I will take at least 50% or something like that, depending on the strategy. And then I would have my second TP basically at the next band, and so on and so forth. So you can do a quarter here, 50% here, and a quarter for runners. And it's not always. I mean, sometimes, and we will see some example, sometimes price just shoots up right to the high band 3. But yeah, you can be lucky and have an entry, and could have put your TP right at the very top. But it's usually not something you can anticipate and then expect to like repeatedly be successful in. So as traders, we have to take profit and then reinvest our capital, and that's called trading. Otherwise, you are just a hodler. The Gon Trading Bands are great for hodling strategies too. So, for example, if you see the low band tested, usually everyone will be, or the market will be super bearish here, and everyone will expect prices to fall way lower. But if you get a pinpoint entry at any of these bands and just say, okay, I expect this consolidation to end within the next few months, and then we will have a bull market, just enter here, and whenever price reaches the high band 1, 2, or 3, then start taking profits. This is usually not a strategy I do take myself, but if I happen to be around and have some capital free for long-term investments, I may take some entries here. But generally, I'm more interested in entry at a break of a resistance band, and then target the next 2 or 3 bands above that for an exit, especially in an uptrending market like we are currently seeing. All right. So yeah, first strategy, wait for an accumulation or a consolidation period to come to an end, and then the price starts creeping higher, pushing against a resistance band and getting squeezed from beneath through the relative strength line. Those breakouts are a great entry. Let's have a look at some past, and yeah, I mean, everyone is a genius in hindsight, but I just told you, and I'm actually long on fill since yesterday, that I take entries based on this, and I will show you some more examples in a bit. But so for example, in the past, we could see the same example here. The price starts moving or closing above the 8 EMA, the relative strength line, and the relative strength line is starting to curl up. There is a resistance band here, high, very, well, relatively big candle. So that's why I would have only taken a 50% entry here at the close, and then wait for the 8 EMA to push through and get retested together with the band, and add 50% more here maybe. The reason why I only take a 50% entry at such a large candle, which still is above the or closes above the resistance band, so in theory it could just keep going. And that's why I take a 50% entry, because I don't want to miss such an occurrence in the current markets. I mean, the market situation is always important when you make entry decisions. But at the same time, you have a huge gap to the 8 EMA, the relative strength line here, and the relative strength line has not yet followed price through the resistance band. So if I go all in here, first of all, it's a very difficult place to position my stop loss. So if I would have taken 50% here, my stop loss would have been under this candle, under the large candle, because I don't want price to go beneath that anymore. If it goes, it means that it will be back under the band, it will be back under the relative strength line, so I have to reassess if it's really gonna continue up or not. And yeah, then you have the issue of a reward to risk ratio. If it just keeps going, let's say, and you do not get any retest, and you will just ride the market with your 50% position size entry, your first target will be the next trading band, which is a reward to risk of 1.38 in this case, which isn't necessarily a bad thing. If you have a high win rate, you don't really have to worry that much about reward to risk ratios. But let's say you take 50% off here and the other 50% at the band after that, it's still gonna be an okay win. But I would not go all in on a large candle far away from the relative strength line and no obvious or clear vision on a stop loss. So the next 50% entry, which is a more higher probability entry in this case, is when the relative strength line pushes through the band and gets retested together with the band. So here you can then take an entry, very clear invalidation here, and also higher reward to risk ratio, first band, second band. I mean, at this point, again, it will depend on the time frame or the length of time you want to spend in the trade. But if I already have like 3.4 reward to risk and then 8.7, I will just take 50% and 50% and move on to the next trade. Of course, you can also leave 25% for a runner to the next band, where you will have reward to risk of above 17, almost 100% increase. And yes, in this case it happened, but you will have to see if it's like worth the time for you. So you would have spent 2 months in this trade. If you trade with leverage, 2 months of potential fee payments, etc. And I mean, for me, it's usually not worth it. There are certain exceptions, but it's not the norm for me. Anyways, so you see the same thing happens again here. So price pushes through 8 EMA, or the relative strength line follows. You get a good retest entry. So you have the same here. Price pushes through the band, followed by the relative strength line, and they get a retest right here. So you can actually add to your position at this point. Let me just go back in regarding to when to move the stop loss. So that's really up to you, to be very frank. And I usually move the stop losses either when my first target is reached or even before that, because I've been in this market for quite a while. I know that news or liquidation wicks can happen at any time. So I will just keep moving my stop loss to at least break even when I see that the candles continue to move and move up or further from my entry, and they keep respecting the relative strength line. That is basically when I will start moving my stop losses. And at that point, it's a risk-free trade. So you can consider your risk, your portfolio risk, to be zero. Of course, there are fees, or if you trade on certain exchanges, yes, it's not exactly zero, but more or less zero, for argument's sake. So when you see the same pattern happen here, where price closes above the band and then the relative strength line pushes through, and you get this this retest, another entry can be taken here, because your current exposure, be it 50% or a full position, is zero. So you can add and have the added value of another almost reward to risk of 3 trade, which actually gets hit quite fast, but it doesn't have to. So you can keep stacking entries based on the price pushing through, followed by the relative strength line, and then just keep targeting the next band or the next band, and just make sure that you reduce your risk with a stop loss to break even or even into profit, depending on the price movements. And don't be greedy. I mean, if you would have been greedy and you didn't adjust your stop loss here, and you didn't take any profits here and here, you would have been stopped out. And you should always know that the market will eventually move against you. So it's the best trade is where you are in fast and out fast. The more time passes, the more time you give the market to move against you. So don't get greedy. Don't target always the highest band, except if you get a super good entry at the lower band and you have a long-term strategy. You don't care about months or years passing. Then it's okay. But if you're trading with the Gon Trading Bands, just take your profit and move on. You have so many assets available, and price keeps moving up and down. You will eventually find the next trade. And so this is a very simple yet effective entry strategy in an uptrending market. So if it would be a bear market or a chop, a consolidation, then the strategy would be different. But in the current market situation, this is how you can utilize the Gon Trading Bands, only the Gon Trading Bands, for very beautiful high probability entries. And you know where you should put your target. Excuse me. So don't aim for exactly the band or a little bit above the band. You may get lucky with a wick, but usually it's just safer for profit taking if you exit just a little bit beneath the band, just to be sure. In and out, quick and painless is the best strategy. And one thing I also learned to care about, once you have your entry and you reach your target, so entries here, first target, second target, let's say, move on. So don't try to force re-enter here and then target one more time here. It may work out, and if you see a price action structure that's favorable to that, go for it. But just move on. You have this so many assets, and one of them will still be here, or will still be here by the time you're already out of in this case fill. Maybe BNB will still be lagging behind, and you will have the same opportunity, because in crypto still the market generally moves in the same direction, but some coins are lagging. So if you can find the early movers through this and then continue to reinvest your capital into the late movers, that will be the most beautiful profit period of any year for you. And yeah, just experiment, go through backlogs. If you have a subscription, a paid subscription, I think has the replay, the bar replay function. You can just go hide some of the price action and then see, or would I have taken an entry here or not, and then see how price played out. It's basically back testing. So let's add some indicators, especially the DivaRSI, for some more confluence in our entries. And the more confluence you're looking for, the more indicators you add, the more complicated it will get. So do not worry too much about like getting it right from the very beginning. It's watch the charts, watch the price action, past price action as well, and see how, for example, the Gon Trading Bands and the DivaRSI, later the Gon Conviction too, how they move in sync and what happens to price usually after you see certain patterns. So I'll just give some examples, but I want to make sure that you understand the Gon Trading Band strategy itself. Again, to reiterate, the most important thing is where is price in relation to the bands, and the second most important is where it's in relation to the relative strength line. So those are the two main components I use for my strategy, and the DivaRSI is for confluence. And confluence does mean if it fits the bill, it's nice, it's a higher probability entry, but it doesn't have to fit perfectly. And let me give you one example. Let me just, so the DivaRSI, explain what the DivaRSI is real quick. It's a slightly modified RSI that has the capability of showing divergences and possible divergences. So at a point where it's not super clear yet if it will be a divergence, but there is a potential or there is a possibility, it will show you those relatively early on. And you can also have the hidden divergences and everything showing, but the standard is that the hidden ones are disabled, and I usually do not care too much about divergences in these markets, because from experience in general uptrends or a pre-bull market, and I don't want to really call it a bull market, I don't know if Bitcoin is really going to continue or what's going to happen, but in general uptrends, divergences are often ignored, especially bearish divergences, or they will get invalidated. But that's a whole different topic, so don't worry about it. So we can just disable the divergences for this video, and we need the labels on the price scale just to make sure we get the correct reading on the DivaRSI. But in the status line, we don't need it unless you want to check past data. Then just leave both of them on. All right, so again, the most recent price action and why I took the entry at around here. So as I already have explained, so price is getting squeezed between the relative strength line, it's pushing through the resistance band, closes above it, gets the retest of both. So that's already good enough for an entry for me. However, for Confluence, I also look at the DivaRSI. So what's happening here with the DivaRSI? We see that it's retesting the 40 level. So I have the 30 level, 40 level, 50 level, 60 level, and 70 level, just for reference. So it continued to bounce on the 40 level and then broke above 50, retested 50, broke above 60, retested 60, and now it's moving on towards 70 and probably plus 70. So usually, not always, again, when I say usually, don't perceive it as always, or not even as the majority of times. When I say usually, I say often. Often is probably a better word. Often after the RSI breaches or breaks above 50 and then gets a retest, the the cleanest or highest probability uptrend will start after that. Yes, you will find examples where that's not the case, but if you watch or analyze back price, you will see that as long as the RSI is moving above 50, 60 even better, 70 is great, you will have the biggest movers in the market. So I see that the DivaRSI is in a favorable trend, while price is pushing towards the resistance band. So what happens in the price if we take it together with the DivaRSI? So it starts from here, hits the band, the resistance band, when the DivaRSI breaks through 50, then gets a relative strength line retest, which is here shown as the 50, give or take, retest on the DivaRSI, then breaks through 60, and that's the second tap against the resistance band here. So the first one was the break above DivaRSI 50, the second one the break above 60. So I see that the strength in these tests to break the resistance band are getting stronger, and that's good confluence for me. So then we get the price close above the band, RSI pushes through, and the next retest of the band and the RSI, the relative strength line, is also the retest of 60 on the DivaRSI. So I love to see that kind of stuff. And at this point, I've taken the entry, and this is what I talk about confluence. So, excuse me. It's already good enough that we get the price close or the push through of the relative strength line through the resistance band and then the retest. But seeing confluence like, oh yeah, the first test break through 50, the second test break through 60, and then the relative strength line retests are also confluent with the retests on the DivaRSI, that gives me additional confidence in that this move is probably going to go further up, potentially to the next band or the next band, when the RSI starts to push towards 70 or above 70. So that's what I mean with confluence. Is it necessary? No. Is it nice to see? Yes. So for example, if the price would move a lot, and okay, let's take the previous example here. So here the large candle, you remember 50% entry here, 50% entry here. What happened to the DivaRSI? So with this candle, and just a second. So here it breaches 50 on this candle, the DivaRSI. You can see it here. DivaRSI is 56.465, and we get a good candle close above the relative strength line. Here, price also closes above the relative strength line, but the DivaRSI is 46.154. So yes, price is starting to move in the right direction, but the Diva confluence is not quite there yet. On the next candle, we have both the close above the relative strength line, green box, and DivaRSI is at 56.46. So, I mean, this is between bands. I'm not really that interested in taking any entries here. But if I were to, this would have been a very high potential candle for me, because I see the confluence in the DivaRSI and in relation to the relative strength line. But depending on whether or not you are into that kind of relative risky entries, it usually doesn't concern me, because I'm only interested in prices while they are at the bands. But that kind of confluence you can all look for. And then anyways, so what I wanted to talk about is this huge candle. You see that the DivaRSI pushes from 56 here when the move starts to 77.077 on this one candle. So often it will mean that there is some cool down coming. You can already tell it's a huge candle. Relative strength line is far away. So, and the RSI, the DivaRSI, also accelerated very fast into the overextended area. And it has not retested the 50 nor the 60 level. And what happens? When the relative strength line gets retested, the 60 level on the DivaRSI also gets retested. So you may miss this move if you only stick to the bands, but if you have added confluence, like here it starts pushing through, like I explained, and the RSI is above 50, very nice. It has retested and confirmed 60 support here in confluence with the relative strength line retest. So then you can take a higher conviction entry at this point. It's a higher probability. You may not get that entry, but if you get it, it is the higher probability entry, because you already have confirmation and confluence both from the DivaRSI and the Gon Trading Bands. And don't worry about missing this move. It is good reward to risk, probably. I mean, if you would have put your stop loss here and entry here, probably it's above 2. But it is risky. So if you have a high risk portfolio, some semi-gamble money, go for it. But if not, just wait for confirmation and confluence All right. Let me add Gon Conviction 2. And again, this is the second level of confluence. So main, Gon Trading Bands. One confluence I like to see is the DivaRSI and the Gon Conviction. It's only like the cream on the top. The Gon Conviction indicator shows you the buying strength or the bull conviction, so to say, behind moves. And the key threshold level is at 30 on this indicator. It's this yellow line. So first of all, you have to see is bullish conviction above bearish conviction, and is the bullish conviction above the threshold line of 30. So you can see that while price consolidates, like here, you will have bulls on top, then bears on top, and so on and so forth. Because it is consolidation, sometimes you have selling stronger than buying, sometimes you have more buying than selling. So this is normal. Nothing, there is no added insight on this in this consolidation phase, basically, from the conviction indicator. But what I like to see is if I already have the confluence of the price on the Gon Trading Bands and the confluence on the RSI, I also like to see that, for example, bearish conviction or the selling power or the bear power here has been on a decline for quite a while. Basically from here on. And even when the bull conviction basically went a little lower during the retest of the relative strength line, the bear conviction did not really shoot up as much. So if you compare this loss of bull confidence, let's say, against this rise in bear confidence, the bear confidence did barely notch or did barely moved at all during this retest of the relative strength line. And excuse me, based on this whole price action and where it is in relation to the bands and where the RSI is, I just see further confluence that the bulls are in charge here. Bullish conviction is way above bearish conviction. It's moving around the threshold, while bear conviction is just losing all confidence, so to say. That's one way I get additional insight of the probability of the move. And again, don't worry about the confluence stuff. Just look at some places where you see clear entries. So for example, here we had the same, right? You see that bullish confluence, bullish conviction has been rising a lot between this candle and this candle. So between these two candles, the price hasn't moved that much, but bullish conviction has moved above the threshold of 33. You can see the number here. The threshold of 30, I mean, it's 33.6. Here it was still 28.14. The RSI moved from 46.154 above 50, so to 56.6, and the price candle has closed well above the 8 EMA, the relative strength line. So if you see this kind of thing where bull conviction, or in short scenarios the bear conviction, moves above the threshold, you see the RSI moving above a level you were eyeing, so especially the 50 or 60 levels in our case. Plus you have the relative strength line confirming, a price confirming a close above it. And that's as an early sign that things may start get rolling. I mean, you cannot like 100% say that, okay, this is the move, the consolidation is over. We only know because we look at the back price data here. But you can get an early confluence view of, yes, bulls are actually taking over. The conviction has gone above the threshold level. The RSI is moving higher. I mean, RSI moved higher here too, and higher here too, but bull conviction has not gave the confluence, did not give the confluence like it gives here. Here it's 30.08. Technically here the bull conviction is above the threshold, even if it's just by 0.8. We have to be honest here. RSI pushed above 60, great, 61.53. We got the candle close above the relative strength line already for a couple of days. So would you take an entry? Yes, if you are into risky entries. Again, this is nowhere near any of the bands. That's what makes it risky. So you will have losers like any other trader if you especially if you take these risky entries. But the 1 hour that you would have potentially lost here, you could have made up back here. It's again based on your trading style or the aggressiveness in your trading. You can use these signs for confluence and then get higher probability entries. But again, for my strategy, my personal strategy, this price action here is irrelevant because it's not at any band. If anywhere, I would have taken an entry here and probably would have got stopped out here because I would have moved my stop loss to break even, maybe around here, and then I would not touch the price again until this point or this point. All right, this is the basic introduction to my trading strategy based on the Gon Trading Bands in confluence with the DivaRSI and Conviction. Now I will go through a number of assets to give you more examples.